It is a game changer, isn't it?
So the idea is with the Trading Journal series, I just wanted to kind of document, and show that consistency and show it in a way that people could follow if they're interested in.
I think I'm going to watch them after we've had our call, actually, because I'm very interested in that.
Yeah, so
I found a system to...
I'll just start with my macro thesis, right? I think, and I was going to upload a video soon because we're kind of coming close to the quarterly close, so it's kind of a fitting time to upload a video on the quarterly close. If we're looking at a quarterly chart, Bitstamp is more accurate just because it's got more price data. But you can see, quarterly close is April 1st or last day of March. And so there's a lot to go into with that. But I mean, to boil it down, essentially the quarterly close, in my opinion, is the time where the trend matters the least, right? So if, say you go down to, you look at the quarterly opens, right? If you say we just go to daily chart, you can see quarterly opens like your July open, your October open. There are times where like the trend really doesn't matter that much. So like you have your quarterly open here, fourth quarter, and yeah, you have a downtrend on the daily, but then it's a quarterly open. So it's one of those times where the established trend matters the least, right? Because those big institutions are repositioning and taking profit or adding risk around that quarterly close. So it's a point where there can be a little bit of a reversal or the trend may not continue, that type of thing. But yeah, so that's something to keep an eye out for, the quarterly close. It's coming up in
end of March.
2 weeks or so. And but so you're looking at the monthly chart. Monthly still uptrending. Got your higher high, higher low, higher high. Weekly is interesting because weekly. This is how I would frame the macro situation. So you have Wyckoff distribution, Wyckoff accumulation, higher high swing failure pattern. Then the Fed announces the interest rate intention to hike interest rates, and then that gets priced in the market. You get pretty heavy sell pressure going down to this macro support down here. Pretty heavy sell volume, and then price hits there, and then you see that volatility dry off at this macro level. So that's kind of what I have my eyes on right now, and you see price sort of within this consolidating range. I'll switch over to the Coinbase chart because that's where I've got my trade on. You can see this live trade right here. 80 position size. So originally going down into this lower time frames, I had framed a entry based off the idea. Let me go down to the hourly time frame. So I had taken a long here, and price went up, and I took profit on this rise in price, different levels. I took about 60% profit booked. Then price came back down here, and I framed a trade based off this retracement. I was looking at this as a point of release, right? So this area right here, when price came down and revisited this level, I took a long position there, and it did give a little bit of a reaction here, right, moving up, but not really, never really hit this distinction and didn't really get deep into that this inefficient move right here. I actually got stopped out on that trade here because I had a stop right here, and so I got stopped out on the trade. I think I entered long here, got stopped out there.
Was that point, that's one you just spoke about, was that a day when that was a day there was a big data point, wasn't there, on Forex? I'm sure I noticed that. It's the first time I've noticed Bitcoin actually behave that big long spike there.
Yeah, I mean, it may have been. I just wasn't paying attention to Forex at that time, but yeah, it could have been.
It was,
So I ultimately got stopped out there, but then price gave me an opportunity to re-enter. So when I saw, I saw volatility kind of coiling up, and then it starts expanding. Well, its first expansion, it stopped me out here below these lows, but then it came and ran up above these highs right here, and and then you can see that on this retracement after that, I entered here, managing with a stop here, and now now I haven't managed this trade. I need to manage this trade further, but essentially I'm looking. The idea is I've got my entry looking for this volatility to expand to the upside. Looking for these this range here. So you got your consolidating range, and you can see kind of prices getting pushed into this narrow range, and it's starting to break out, right? At least it's giving that appearance. We haven't closed above this high, which is critical, but we had that FOMC meeting down here. I forget exactly which day it was, but it was somewhere in here around this this coiled range, and then after the FOMC meeting, then the market starts expanding, volatility starts expanding, and so I actually wanted to add risk to the position. I missed that buy order by a few dollars right there, but that's why I don't generally try to not draw lines in the sand in the market, right? So I'll, that was only adding a position, 20% position, right, of the size of my larger position. So, if the more lines in the sand you draw, where you demand that the market have a certain reaction at a certain level, is the more times that you're allowing the market to frustrate you. And that's why I tend to try to use different price distinctions, different tradable price distinctions to sort of build out that position and pull in profits and manage it in sort of a dynamic way that I'm really not able to capture in the trading journal, because a lot of it's happening very, very quickly. But yeah, so ultimately right now I've got an open position from 38.88 roughly. Looking for that volatility expansion higher.
Just going back to that comment you made that you can't capture it in the trading journal. Ask me after your analysis. I've got a tool that I think you guys might find really interesting. But I don't want to interrupt you guys.
Gotcha. Yeah, so this, just to reframe my trade idea, or the swing I'm looking at, right? If you're trying to conceptualize a price swing. So we saw volatility kind of coiling around, and I uploaded a video on this, so apologies if I'm rehashing this, but essentially see volatility like sort of drying up here, and then it expands at the FOMC data release. And so I'm using that low as the low set in prior to the FOMC expansion. So I'm looking at this as a price swing, right? Of course, it hasn't topped out yet, but I'm looking at this low as very significant. That's why I got my stop there. But now the price has sort of moved in my favor. I think I'm going to start, I can manage this trade live. I think kind of what I want to do is frame my expectation for the trade. And my expectation is based off sort of a higher time frame idea. And that's, this macro level, and it's sort of based off the macro picture. So I'm kind of expecting a type of volatility expansion that would reflect that being a macro level, meaning that significant price expansion that takes place over a significant amount of time, right? Of course, on the high time frames, right, those things take a long time to play out. So that's kind of what I'm looking for right now. I also want to stay open to the idea that we really haven't seen that volatility expansion yet. Um, I'm just positioned for it to expand to the upside. But if it were to expand to the downside, I also want to have the mental flexibility to also participate in that move, right? So, uh, something that really helps develop that mental flexibility is managing risk a little bit tighter, right? So if I'm looking at this swing right here, it's already moved in my favor. The type of thing I can help to do to give myself that mental flexibility is manage risk and profit, right? So that if price collapses against me, that I don't feel that loss. I'm able to re-enter in the other direction. So I could start, moving this stop up. It's still a significant level, but maybe prices moved what? Let's see. This is let's see. Essentially moved from 37,777 all the way to
Oh, if
42,000.
you, if you press shift and click, it pulls up the ruler for you straight away.
Oh, really?
Yeah, shift and click. There you go.
Nice.
That's a game changer.
There you go. So we'll do it for my entry at roughly this level right here. So it's already moved 9%, right, in my favor. You can see.
Yeah, you should trade your stop just below the last spike before the run up.
So here's the account 2.7 mil. I'm just showing this. I just want to show people that I'm not just all talk. That I'm actually a consistent trader. So I'm going to be
Yeah.
documenting that equity. And prices move 10% in my favor. So probably a good time to start taking profit. So I'm actually going to take. So typically, my profits are sort of based off a Pareto principle, meaning that I want to take increments of 20% profit. So so 20% of 80 is roughly 15. Maybe not exactly, but I have to pull out a calculator to do that. But I'm going to take 15% profit or 20% profit right now. So I'm just going to put a limit order right near, it hopefully hits it. And I'll put another stop order here, 41,525 roughly. The idea is that if this low is taken out, then this could be start to create an apex high. It also might not, so I don't want to take off the entire position, but I just want to take advantage of that possibility. Then I'd also want to manage risk here as well. So 40,137, 40,137, and then of course I need to modify this stop to reflect what I ultimately do. But so I'd also want to add a little bit of risk if price comes down through this, hits the stop. I want to add risk at these price distinctions. But the idea is I want to be taking profits in general. So if I do add risk, it's going to be smaller than the amount of risk that I'm managing. So maybe if I'm using a 15 lot sell stop, then here maybe I'll do just for the sake of simplicity, five lots essentially. So that would be 40,915 by 5 lots. Oh, sorry, that's 15. So make it 5. And I also like this level right here. This level here. This point of release. You can see these. It kind of represents the band where the volatility contracted, and then you have this volatility expansion, and then this level here, this point of release, essentially. I like that level. It's also kind of confluent with my my entry. But again, I'm just adding a small amount of risk on the retracement, so that's roughly 39,100, 5 lots. All right, now I gotta manage my initial stop. So if price, my position size now is 65. If price hit this stop, then it would go down to 50, add 5 risk, 55, minus 15 would be 40 risk, and 45. So if price collapsed all the way down, I would need to manage 45 lots. And now, so now my risk is managed in profit, roughly. And of course, there'll be, intermediate low time frame swings that occur in here that I'll also trade. So this is not static. I'll change this, but it's just a way to manage risk and profit. And then I guess the next question is, where do I want to take profit if price moves in my favor rather than collapses against me? Well, this level right here is a very clear level. The opens and closes right there, and then these highs as well. Also, you have a very significant. This open and close is also a point of release, right? A very impulsive move. You'll have the same thing here as well. This point of release. So I would manage, add some take profits there. So let's see. 44.44, roughly. Again, it doesn't have to be perfect, It's I don't demand or expect that perfection. So maybe I'll do 10 units there, 10 units here, 45, 800, 10 units, and maybe 15 units up here at 50.80. And of course, this is just a static thing, right? Price moves dynamically. I revisit, take shorter time frame entries. But that's how I'm conceptualizing this position right now at this moment. Yeah, so I think I'll pause the video here. This, I guess, will be another update to the Trading Journal series.